Hi, we're going to discuss some tax opportunities or filing requirements, income and expense items for drivers typically using either Uber or Lyft as their means of employment. There's been a lot of discussion among the drivers and a lot of misconceptions about the new 2018 laws compared to the 2017 laws. Primarily, there's not going to be a lot of difference. And the reason for that is that that tax act is primarily, except for the portion that talks about corporations, that tax act is primarily affecting itemized deductions on a personal tax return. And that's not where any of the expenses go for if you're an Uber driver. Having said that, that's an overview of what we're going to talk about. My name is Dr. Gene Lilly. I'm the president of American Academy for Taxation. We confer graduate degrees, master's and doctoral degrees to students who succeed in our tax studies programs. I'm also a sole proprietor. I own my own tax accounting firm in Westville, New Jersey. And all that information is going to appear on your screen magically so that you know how to get in touch with us if you have any questions or whatever. So to begin with, let's look at what are we going to file? We're going to file a Schedule C, profit or loss from business for a sole proprietorship. Most of the time, the individual operators are going to be sole proprietorships. If, in a lot of cases, you don't have to have a federal tax ID number, but I happen to think it's a good idea to get one. That separates you from the business activity. But let's start with the first part, name of proprietor. If you are unincorporated, you're not a partnership, none of those rules apply, then it's just your name. And you want to put your name exactly as appears on page 1 of the 1040. If you say John E. James Jr., then that's how you want to put as the proprietor. In your Social Security number, that's required. Principal business or profession, including product or service. Okay, the principal business or profession is driving. Business name. If there's no separate business name, leave it blank. Business address. You want to put your whatever address you're using, and city, town, post office, state, zip code, all of that needs to be in there. There's a thing that says enter code from instructions under letter code B. They're looking for an NAICS number, and I already know that the NAICS number for Uber drivers, it is suggested that it be 485990. That's the number that they want you to use for that. The employer ID number, or EIN. We talked about that a while ago. You may or may not have it. You may not need it. There's other forms if you're filing excise tax returns or stuff like that. You will need it. But for now, again, I prefer to get it because it separates your personal stuff from your business stuff. We're going to be looking at the accounting method. The accounting method is more than likely going to be cash. That's what almost everybody uses. Did you materially participate in the operation of this business during 2017? It's a check the box, yes or no. If no, if you didn't materially participate, you may not be able to take any losses from this. If you started or acquired this business during 2017, check here. That way they won't know to look for something in the past. Did you make any payments in 2017 that will require you to file a Form 1099? 1099 is what you would issue to a subcontractor if you paid that subcontractor $600 or more during the calendar year 2017. If you don't have anybody working for you, either as an employee or as a subcontractor, then you don't have the W-2 series or the 1099 file. Did you make any payments in 2017 that would require to file Form 1099? Normally the answer is going to be no. If you did say yes, did you file or will you file required Forms 1099? I'm going to stop there and tell you that if you are required to file a 1099 for someone and you fail to, the fine is $100 per 1099 that you should have filed but failed to. It's the first part of the fine. The second part of the fine is the IRS will disallow the deduction on your tax return, meaning that whatever you paid them is going to automatically fall down to the income side. It may not be in your best interest to do it that way. There's also something you can do if you have what's called a qualified joint venture. Perhaps you and your spouse are doing Uber driving using the same vehicle maybe. Some days you drive, some days she does, or some day he does and some days you do, depending on how you're set up. A qualified joint venture is in effect a partnership, two people doing the same business activity, but since they are husband and wife, and they must be husband and wife, you elect to treat it as sole proprietors, and you would take all the income and expenses and split it however you're going to do it, down the middle, 60-40, however that works, whatever your arrangement is, and you would each file your own individual Schedule C doing that. We covered all the questions. The next thing I want to look at is the income. If you received more than $600 from Uber or Lyft or any of the other sources, then they're going to give you a 1099 and you're going to be reporting that income. That's going to go in gross receipts or sales. You also may be getting reimbursed for bridge fares or whatever other things you want to reimburse you for. You can include it in there, or you can include it, I'm sorry, I'm in the wrong section. I got ahead of myself. Or you can include it on line 6, which is other income. The receipts for driving would be in box 1, gross receipts, and then the reimbursements for the out-of-pocket expenses would be line 6. That's pretty much the sum and substance of the income. You're going to be receiving, probably going to be receiving on a 1099. Now we're going to look at expenses. And again, follow the model of the Schedule C, sole proprietorship. I'm going to tell you exactly what you're going to need. Advertising. Did you buy business cards? Did you pay for, and there's going to be some differentiation when you do this. If you sponsor a Little League team, for example, that's fine, and that's an advertising deduction, unless your child is on that team, then that changes the flow. You're really paying for your child's team, so you're not going to get a benefit for that. The second line in expenses is actually line 9 on the tax return, and that calls for car and truck expenses. Car and truck expenses are probably the single biggest area that you're going to get some kind of a deduction for, and there's two methods that you can use to account for your auto expense. One is by using mileage. A lot of people assume, well, Uber or Lyft, they take care of that. They have the GPS system, and they tell us what the miles are that we logged in. That's only the miles that you have when you have an active customer in your vehicle. If you're trolling in a given area, looking for a good pickup, and you want to be where that pickup is when you're near that location, then that mileage is also deductible, and Uber and Lyft do not account for that. You're going to have to do it on your own. All of the Uber and Lyft rides that I've taken, I see multiple devices. And the multiple devices are the driver's own system, another system for receiving maybe alternative alerts that might be out there for traffic that might not be in the Uber or the Lyft system. There's just multiple devices for import and for reading what's going on around you. Since you're already, again, from the Uber and Lyft drivers that I see, they're mostly tech savvy. IRS.gov or IRSmiles.com or whatever it is that you know on your smartphone, you can go out and get a mileage log that will take care of all of the stuff that you're going to need. You're going to need a mileage log that shows the beginning and the ending mileage. At the very least, the beginning and the end of the year, preferably the beginning of the day, the end of the day. You're going to have, or your shift, I should say. There's no such thing as 100%. You can't possibly use your car 100% of the time for business purposes. you took a detour on the way home to go get diapers for the baby or something, that's personal mileage. The IRS also uses something, everybody thinks that, you know, when I get in my car, I'm automatically on the clock for a tax deduction. It's not true either. A lot of people will give you that deduction, but it's, be wary of that one. The IRS uses the first pickup rule, and that is when you leave your house, when you get to your first pickup, that's when your mileage log starts. You don't necessarily work that way. A lot of times what happens is you leave your home, say you live in Northeast Philly, and you like to troll around Old City, and it's 8 or 10 miles till you get there. Well, you don't have a fare yet. You're just going to get there and ride around until you get one. That, once you get to that area where you normally would pick up your fares, that's when your mileage clock should start. You can use the mileage method, or you can use the standard deduction. The standard deduction is, the standard deduction is the mileage amount, or you can use the actual expenses. Actual expenses would be the amount of fuel that you spend, the amount of repairs that you make, the interest on the loan for the car, depreciation on the vehicle, insurance, registration, all of that stuff. But I will warn you that you can't flip-flop between one and the other. Once you select a method for a vehicle, you stay with that method until you get rid of that vehicle. When you get to the next vehicle, you can change to a different method or keep the same one. I'll also caution you that you don't get 100% of the gas, you don't get 100% of the insurance, 100% of the registration, 100% of the repairs. You don't get that. You have to keep track of the mileage anyway, using that log that we talked about, so that we can see what the percentage of business and personal use is. Remember, there's no such thing as 100%. Once we establish that 85% of the time you're using your vehicle for this driving activity, then it's 85% times the repairs, it's 85% times the gas, it's 85% times the insurance. You don't get it all, you just get that percentage. Then under either method, you're required to keep miles, and generally the mileage is going to give you a better deduction because it includes a factor for fuel purchases, repairs and maintenance, depreciation on the vehicle, interest on the loan, that sort of stuff. But is there anything else outside of the, if I take the standard mileage rate, which for 2017 is 53.5 cents per mile, and in 2018, which has already started, it's 54.5 cents per mile, so it went up a penny for 2018. Yes, there are other deductions that you can take for your vehicle, other than what's included in the mileage rate, and that's going to be cleaning the car. That's going to be maybe air fresheners that you put in it. That's going to be detailing, that you get your car detailed, waxed, and cleaned every once in a while to make it look good and appealing to your customers. That's going to be any of those types of items that is both ordinary and necessary, and you actually do, will be allowed as a deduction. Now, ordinary and necessary is a tax term that comes out of the tax code, and that's code section 162. Ordinary and necessary means it's ordinary for you to spend this money on that item for your business, and it's both ordinary for that business and it's necessary for you to be able to complete your job doing that. There's also a code section that says 262, which says that if it's more personal in nature, you're not going to get it as a deduction. More personal in nature would be something like, well, you know, I want to look presentable to my clients, so I'm going to get a haircut every 2 weeks. I'm going to wear a tuxedo every time I drive. Well, the haircut is more personal in nature than tuxedo. There's special rules about clothing. You're not going to get them unless it says Charlie's Uber service or something on it with the telephone number and how to reach you, or who to ask for when you call for an Uber pickup. On the back, page 2 of the Schedule C, there's 3 boxes, actually 4 boxes you have to pay attention to. What's the date of service? When did I put that car in service? If you're using the mileage rate, then you're going to put in the business miles that you use the vehicle for, the commuting miles that you use the vehicle for, and the personal miles that you use the vehicle for. Those 3 are required. and then you're going to do simple math, multiply the rate for 2017 times the business miles, put that number on your tax return. The other things, like the car washes and stuff like that, you're going to move that onto other expenses, which is line 27A, and there's another schedule in the tax return. We'll get to that in a little bit. And again, depletion, you're not going to have that. Commissions and fees, you may have some commissions that you pay to somebody because they put you on to a particular place that they always, within 5 minutes, they always have a pickup there, and you keep going back to that other place, and it's worth $100 for that referral. So you give somebody that, that would be where you would put that. Contract labor. It's hard for me to imagine that you're going to pay somebody to drive your car to be an Uber driver, but it's conceivably possible. If you do, that's where you would put that expense. You're not going to have depletion. Depreciation in Section 179 expense deduction. You could have that if you're using the actual expenses, but as I said, it's a little more cumbersome to do. Employee benefit programs, you're not going to have that. Insurance, you will. It can't be health insurance. It's got to be insurance for the vehicle. You're probably not going to have mortgage interest paid to banks, but if you got a loan to buy something other than your vehicle, you could have a mortgage interest to a bank for your startup costs for Uber, but more than likely that's just going to be your personal vehicle. That's going to go on line 16B, other interest expense. And you're not going to put all of it in there. You're going to put the prorated portion after you figure out what the business use of the car is. And if you're using the mileage, you're not going to put anything in there. Legal and professional services. If you hire an attorney to draw up documents, that you want to be a limited liability company or something like that, whatever fees, or if you got sued because you put the wrong air freshener in the car and somebody decided to sue you because they don't like that fragrance, you know, anything's possible. Then the legal and professional services would go here. Money that you would pay me to do your tax return, that would go in this box, things like that. Office expense, you're not really going to have that much of, but it could be, you could be keeping track at an office at home, for example, of the days and times you're available and the number of trips that you made through Uber and fixing out your expenses and that sort of stuff. All of that can be taken care of on this particular line for offices. But again, it shouldn't be that much. Pension and profit sharing plans, likely not going to have anything in there. Rent or lease, vehicles, machinery, and equipment. Let's talk about vehicle lease again for a second. If you're leasing your car, again, it's not the entire 100% car lease, it's the business use portion. So after you calculate what the business use is, doing the mileage thing, if you're not taking the standard mileage deduction, then you're going to use this for the amount of vehicle lease expense you're going to have. If you rent machinery and equipment, I really don't know why you'd be doing that. I can't think of anything that you would get for that. Or renting other business property. Other business property would be something like again, I'm struggling with that one. I can't think of anything else that you would rent to put in your car that would be necessary for a fare. Repairs and maintenance. Again, if you're not doing the mileage rate, you're going to take the repairs and maintenance, the business portion of that, based on your mileage logs, and coming up with whatever your deduction is. Supplies. This is going to be if you put paper towels, tissues, new car mats in the back for your fares. Again, the fragrances that you might put in there. Some drivers like to have ice and soda and water and stuff available if somebody wants it. Any of that stuff's going to be a supply. Taxes and licenses. This could be the license that you have for being a business. This could be if your municipality requires that you be licensed in order to perform this function. The license could also be your driver's license and registration if you are not taking the mileage deduction and you're doing the actual expenses. Travel, meals, and entertainment. This is one that everybody gets wrong. If you are a local Uber driver and you drive around primarily one area, say the city of Philadelphia or the city of Detroit, whatever it is, and you venture, if you're in Philadelphia and you drive somebody across the bridge into New Jersey, that's still a day trip. That's within your tactical area of operations, if you want to call it that. You're not going to get any meal expense for that. However, if you provide food for your fares, say for example you have the same person that you pick up at 11:45 every day at this one location, and you take them to go to a business meeting, and you provide them with the McDonald's lunch, then you can take the cost of that McDonald's lunch that you gave to that customer and write it off as a meal expense. But you're only going to get half of it, 50% of that meal. On the other hand, if you have a fare, and I've seen this happen on occasion, if you travel out of your area for a fare, and by that I mean you can't get back before the end of the day. So I pick up a fare at Philadelphia International Airport and they tell me I can't get a connecting flight, they've all been canceled, I need you to take me to Atlanta. Well, that isn't a day trip. You're not coming back before the end of the day, no matter what you do. So any meals that you incur on that trip are going to be deductible at the 50% rate. Wages. Those are wages that you pay to employees. Again, I'm not thinking there's going to be much of that. Other expenses, that's line 27A. We talked about that a little bit. There's a schedule on page 2 that you can list all those things. That's going to be things that aren't listed here. That's going to be the cleaning of the car. That might be the air fresheners if we didn't put them in supplies. It could be stationery that you leave for clients. It could be maybe you have a tape recorder back there so that they can, with removable tapes in it, so that they can take them with them. Or you bought a phone charger and you put a USB port in there, so you're going to, whoever you paid for the USB port installation and the cable for people to be able to use it. Maybe you get 4 or 5 different kinds of cables. All that stuff is going to be listed on the back of this so that you can get an idea of what's deductible and what's listed on this page and what's not. You take that other information, those how many lines there are, you total them out, and that total goes on line 27A. I don't think there's any other mysteries to this. Again, I'll review it before we send it out, but pretty much that's going to be the kinds of expenses that you can look for on the basic portion of the tax return. There are some things that you might be able to put on here, but it's going to be difficult to overcome the regulations on it. One of them is going to be our home office expenses. And again, the home office expense is not really all that big a deal on a tax return. If you're operating at a loss, you don't get the deduction, you carry it over to future years. If you do get the deduction, it might be a limited amount. If you are a tenant renting an apartment, the area that you use for your home office has to be separate and set aside and exclusively used for that business. So it can't be like a table and desk and chair in your bedroom. It has to be a separate area, completely distinct and separate from your living space. Assuming you overcome that hurdle, then you use the number of square feet occupying that particular activity with the total of the unit. And that is that we express that in a percent, and then we can take a percent of the utilities, a percent of the rent, except for that square foot area, whatever that area is. If you do something specific for that area, like buy that desk, or buy a calculator, or buy office supplies, and it's for that specific area, then they are 100% deductible. Along with, there's a companion form to this, and that is Form 1040 Schedule SE. The SE is going to be self-employment tax on this activity, you have to pay two taxes. One is the income tax, which is based on the net of this added to page 1 of the 1040, and the Schedule SE, which is Social Security self-employment tax. The self-employment tax is going to be what normally would be withheld by the employer, what's normally paid by the employee. They're added together, and the sole proprietor pays both halves of that. There is, when you do the home office expense, there's a simplified method, and it's in your Schedule C on how to do it. And that is going to pretty much assure that they use standard rates and standard amounts and stuff for your particular region. And that usually means that if you use the simplified method, that you're probably not going to get audited for that. Another thing that I forgot to mention in the other expenses is telephone. That's huge. But again, and the IRS announced years ago that they're not going to be going about trying to figure out what the percentage business use is and whether you're keeping records to do that. Whatever your telephone expense is, that's what they're going to accept. You're also going to have other things in there like Wi-Fi fees. If you're paying for a Wi-Fi service so that you can be programmed while you're en route, any assets that draw that signal stronger into your vehicle, all that stuff is going to be tax deductible and listed in that area. Covered that. Let's look at page 2 real quick. Page 2, the first part is cost of goods sold. Probably not going to have that. And then we talked about, then you have to answer 4 questions when you're talking about your business use, your car also. Was your vehicle available for personal use during off-duty hours? Probably the answer is going to be yes, because you keep it at your house with you. Do you or your spouse have another vehicle available for personal use? The answer to that's probably also going to be yes. Do you or your spouse have another vehicle? And we talked about that. What was the one I missed? Was your vehicle available for personal use during off-duty hours? Probably yes. Do you have evidence to support your deduction? The answer should be yes, and they're going to ask, is the evidence written? And the answer again should be yes. And then part 5 is the other expenses. That's where we talked about all the miscellaneous stuff that there isn't any spot for in the face of the return. That's the sum and substance of Schedule C for Form 1040. It is the only thing, if you have a qualified joint venture with your spouse, if you are a limited liability company, an LLC, you can't do that. A limited liability company would either be a partnership or it would be a sole proprietor, depending on the number of people involved, but it can't be a qualified domestic activity. That's going to be the end of this. I hope you found it insightful. And again, on the screen somewhere is going to be things that you can, ways that you can contact us. We're going to put our phone number, our email address, and they'll list probably my name again or something. But again, if you have any questions, don't hesitate to call us. We'll discuss whatever it is you need to. Hope to see you soon.